March 16th, 2020. This was the first Monday after the world shut down. At the time, I was a college kid. I was in my third year of university. I woke up at home and I stayed at home. I was working a full-time internship and luckily they didn't lay me off. This is actually my first day of remote work. So I woke up at 8:55, opened my laptop up at 9, and by 9:30, when the stock market opened, took out my phone and opened up my investment app. And instantly I took this screenshot. $26,000. I was stunned, completely stunned. I mean, this was more money than I had ever seen in my entire life. At the time, I was a 20-year-old and I didn't really come from much. But at the same time, I was still able to save diligently up until this point. What I had just done is make one of the riskiest trades in my entire life. I was ballsy enough, or really stupid enough, to risk everything I had on an educated guess. Somehow I risked my life savings, if you could call it that, and I won. So how did this start? What did I do to have a $26,000 day in an unprecedented time? And I mean, this day was obviously unprecedented for a lot of reasons. It was the first real day we were all home due to the pandemic. The first time that people really realized, oh shit, this is real. I remember the streets were empty, no one was outside. It felt a little apocalyptic. So it was obviously a very tumultuous time for most people. And when it comes to that screenshot, just want to preface by saying that I have had no days remotely close to that one since. In fact, I've had a lot of down days, a lot of speculative investments that have gone wrong. And after enough days of speculative investing, you get tired of it. I by no means do this now. I want to make that very clear. So if you think I'm going to glorify the risky decisions that it took to get that screenshot, well, that's not the case. Those days are long gone for me. And my investing strategy now is exactly the same as any other personal finance YouTuber that you can find. But I still think this is an interesting enough story that you could maybe get some entertainment out of it. So we're going to delve in deep. We're going to examine my best day ever in the stock market. We got to start by laying a bit of a background. I really got into personal finance in early 2019. Me and a couple college friends, we were finance majors, but we didn't really have the disposable income to make any moves until roughly our sophomore year when we became co-ops. See, a co-op is basically a 6-month full-time internship where you fully take a break from taking classes and you go out into the world and try to get professional experience. With basically no other responsibilities other than that co-op, we had a lot of discretionary income to spend. And that first co-op of mine, January to June 2019, left me with a lot of free time to spend throughout the day. I wanted to at least look like I was doing something finance related. So I figured, why not start working on my own finances? I was researching investment opportunities, learning how to value stocks based on their 10K reports, and what to do now with all my extra income and how to make smart investments. So eventually, I opened up and I fully funded a Roth IRA. I dropped in 6K, put it all into the S&P 500. Sounds pretty responsible. Flash forward to 2020, exactly a year later, and I'm in a very similar situation. I was in my second co-op, so January to June 2020, and I had saved up another 6K pretty quickly. And I dropped in that 6K into my Roth IRA on February 19th, 2020. And fun fact, this was literally the day that the stock market peaked right before COVID. So a few days pass and I start to see my investments go down. I mean, I think nothing of it, like I'm a long-term investor, this is not gonna faze me. Until I catch word of a certain virus and simultaneously start to find myself on a very specific corner of Reddit. Wall Street Bets. For the uninitiated, Wall Street Bets is where smart investments go to die. In a sense, the community is really just a bunch of finance bros with gambling addictions. It just so happens that yours truly was briefly part of that community. Shameless plug, I even made a song about it back in the day when I was rapping more. Check it out if you want. But back to the actual subreddit. These kids have a knack for making pretty risky investment decisions and essentially gambling all their savings away. And what is their weapon of choice? What do they use to make these risky investment decisions? The answer is options. Now, you've definitely heard of a stock, which is essentially a part of a company. But options open up a whole new can of worms. To be brief, and I'll be quick, an option is a derivative, meaning it literally derives from another financial instrument. In other words, an option derives its value from a stock. Its value plays off of the value of a stock. The catch here is that one options contract is meant to represent 100 shares of a company. So you pay a relatively small premium for the option to buy or sell 100 shares of that company. So by paying that premium, you're granted an options contract. And so based on the price of the stock that it derives from, that price of the premium can either go up and down. It can fluctuate. There's also expiration dates on these options, a bunch of other factors that go into calculating that premium price. But let's not overcomplicate things. This is just a story. And I'm also keeping it simple partially because at Wall Street Bets, they do the same thing. On Wall Street Bets, people either buy a call or a put. For the sake of the explanation, a call is betting that a stock will go up, and a put is betting that a stock will go down. So if someone says puts on Disney, they're betting that Disney stock is going to go down. You get the idea. So when I stumble on this little community in February of 2020, I'm hooked, like instantly. It was addicting because you see people risking their life savings on these trades, making a ton of money. But on the other hand, it's kind of like watching a car crash, watching the other 80 to 90% of people blow all their money. Along with these gain and loss posts that people were making, there were other contributors on the post who were making pretty research heavy and intelligent posts that were giving predictions on the market, different trends, and potential strategies to take. So as the market started to drop more and more after February 19th, a lot of the posts became more doom and gloom. And mind you, this was 1 to 2 weeks before anyone else was really taking COVID seriously. Looking back, it was like this golden window of information arbitrage where the general public really wasn't buying into COVID at the time, or most people really didn't even know what it was. But Wall Street Bets was, big time. And these contributors weren't just making stock-based analyses. These guys were looking at patient data at hospitals, supply chain data, bookings at travel companies, and naturally, I got swept up in it. I was getting more and more convinced. So by early March, more and more people started to make these insane gains just by buying puts on travel companies and different hospitality companies. But meanwhile, my account was still dwindling. I hadn't made a move yet. My account started with a little over 12,000, but by early to mid-March, it dwindled to roughly 9,000. And it was at this point that I decided to go all in. So now it's the week of March 9th to March 13th. Wall Street Bets was still making crazy gains with members left and right flaunting their earnings. But I had a decision to make. Was I going to stay the course as a long-term investor and stick it out? Or was I going to sell at a loss and drop every penny into puts? Everything I learned from investment classes, personal finance YouTubers, and just common sense told me to stick it out. But I had this potentially naive gut feeling that this really was an unprecedented world event, and therefore that the stock market was going to continue to drop drastically. So I did it. I dropped everything into puts. In fact, I didn't even stop at the 9,000 I had left in my account. I opened a whole new brokerage and I put another 6K into there. And looking back, it was insane. I want to say again that I don't recommend that anyone does this. Again, I'm just here relaying my story for entertainment purposes. And let's be real, a strategy like this is always going to come back to bite you. More on that later. So it was Friday, March 13th, and by 4 p.m. when the market closed, I made all my trades. I bought puts on a variety of companies and ETFs, Disney, emerging markets, ETFs that tracked specific countries. When the markets closed at 4 p.m., there was nothing I could do. I had made my decision. So I left my internship that day in person, not knowing if I was going to return on that Monday. I remember they told me to bring my laptop home just in case. And well, we all know what happened after that. I never ended up coming back to that office for the rest of the internship. And as for my trades, at that point everything was locked away until Monday. And looking back, I remember not being too stressed for some reason. Figured if I lost everything that I was still very young and I would have time to recoup what I lost. And I know that's not the smartest advice. Like again, you should not emulate this. In most scenarios, I would have lost all my money and been out like 15 grand. In fact, if I made the same trade just a week later, it would have burned me for all my money. And that's the thing too with options. The timing is very important. In this case, not only did the market have to go down, but it had to go down drastically in order to make a meaningful effect on my premiums. So like I said, if I did this just a week later when the market was starting to bottom out, I would have lost my money because the moves wouldn't have been as drastic. Again, no need to complicate things, but just know that I made this trade at the end of a very golden window from late February to mid-March. And like I said at the beginning, that Monday was the day that I hit it big. Well, maybe medium. Don't get me wrong. What I earned that day was mind-blowing and it was especially insane for my age. But it wasn't necessarily life-changing. On top of that, so much of it was in my Roth that I would have had to wait until I was 59 and a half to even touch it. So yeah, it was awesome, but it's not like I'm going to be retiring off of $26,000. So that begs the question, where did I go from there? See, when you get your first taste of that winning trade, those tendies, all you want to do is win again. Now from this point on, I really didn't make any trades that were at that same level of risk as that first one. I was more playing around, throwing feeler bets. And to give y'all some context, this was still early to mid 2020. So if y'all remember the GameStop thing that happened, that was early 2021. So we're still a ways away from that. So at this point, the market started going up and up and up. The people at Wall Street Bets, they couldn't seem to believe it because the COVID numbers were getting worse and worse and worse. To them, it felt counterintuitive. They kept complaining that the infection numbers were up, hospitals were still at capacity, yet the market only seemed to go up. In this era, it felt like you could put your money in anything and it would go up. SPY, Tesla, Peloton. More on Peloton later. So at this point, I started experimenting with more advanced option strategies. So for example, I would start out by buying 100 shares of a company, and instead of buying an options contract, I would sell an options contract. So remember that options premium that I kept mentioning? When you sell a contract to someone, you're the one who collects that premium. So I started playing this pretty simple strategy called the wheel, where you sell options contracts weekly to collect that premium. I'm not gonna go into detail, but look up the wheel if you're interested. And after that, I started to slowly move away from riskier options plays, and I was starting to look for specific companies that I believed in that I wanted to park my money in. Enter Peloton. If you know anything about Peloton stock these days versus 2020, well, you know where this is headed. Remember when I said making risky plays could bite you in the ass? Well, it turns out you don't even need to play options to get burned. You could get burned from just buying a bunch of one company. So I hopped on the Peloton train at 66 a share. I mean, it started off great. The stock even went up to the 160s. And I was ecstatic. I mean, I felt like I could do no wrong in the investment world. Until scandals emerged, recalls followed, and throughout all of that, Peloton could do nothing but drop and drop and drop. You know, in retrospect, I really should have gotten out when it dipped below 100 a share. But that's the thing with stock plays. You never know what's gonna happen until it happens. So if you play the speculative game, you're gonna get burned eventually. And well, that's what happened to me. Because let me tell you, I still own those Peloton shares to this day. I have not sold a single one. And they are a far cry away from 167 a share. Or even the 66 a share that I bought it at. And so I tell you this side of the story to help balance things out. Because yeah, on one hand, I was able to have this crazy 5-figure big PP screenshot day. On the other hand, I've also had several days where I'm down 3 to 4 figures just because I bought a bunch of Peloton. And I hate to get all like Graham Stephan on y'all because I'm sure y'all have heard it a million times. But these days, what I really do, and don't fall asleep on me, is I dollar cost average into the S&P. I know it's pretty boring, but I got kind of tired of just risking everything on options trades. And at the same time, I got pretty tired of putting 4 to 5 figures into individual companies. I sort of wanted like a low effort strategy that was balanced. And who knows, maybe I'll hop back into options trades someday. But for now, I'm just sticking to the S&P. So I hope y'all enjoyed my little story. I'm definitely a lot more tame with my investment decisions these days. If you know me these days, you know what I preach is sound investing, stable, long-term strategies for a secure future. But if you enjoyed this story, make sure to hit subscribe. Maybe I got a couple more, who knows? I'm Ian the Sage. I'm a 20-something who helps other 20-somethings navigate their personal finances. And I wish you a fantastic day.